You're listening to AI PRISM from Seoul Economic Daily.
910 points. A circuit breaker fired. 8.54 trillion won. What is the opening direction in key binary today, and which rotation names are worth watching away from the semiconductor concentration? It's Wednesday, June 24th. Here's what today's story could mean for the Korean market.
Okay, so let's unpack this, because the KOSPI plunged 910 points, wiping out 742.76 trillion won, which is roughly 485 billion USD in a single session.
Yeah, it really was historic. I mean, the panic was so intense that the exchange literally had to pull the emergency brake and trigger sidecars to halt automated trading. That makes it the largest single session drop in KOSPI history. But this wasn't purely fundamental panic. It was heavily driven by structural concentration risk.
Right, and that brings up a massive contradiction in the sources. Retail investors didn't run away. They actually bought the dip, injecting a record 8.54 trillion won-so, about 5.58 billion USD on crash day. If everyday retail is buying with both hands, who exactly is the marginal seller causing this freefall? Well, you have to look at the National Pension Service, or the NPS. Foreign investors sold off a chunk, sure, but the NPS is the real heavyweight here. And, they aren't selling out of fear. They are structurally forced to rebalance their portfolio.
Wait, forced to sell, because of internal limits?
Exactly. Because tech stocks surged earlier in the year, the pension fund's domestic equity holdings actually breached their mandated 16% cap. To get back under that limit, they literally have to trim the fat, creating a potential feeling of 60 trillion, around 39 billion USD in institutional sell pressure.
Wow, 39 billion USD of automatic forced selling.
Yeah, and when you consider that the top 4 KOSPI names made up 61.7% of the total market cap on crash day, that creates this massive structural volatility multiplier.
I mean, it's like a healthy runner tripping.
Flapping on their own shoelaces, exactly. That runner being Samsung and SK Hynix.
Right, because fundamentally they are sprinting. Samsung's HPM4 revenue just crossed 1.54 trillion, about 1 billion USD in just 4 months of mass production.
Right, and they are even teaming up with SK Hynix for a 300 trillion, roughly 196 billion USD facility in Gwangju. The underlying fundamentals are incredibly strong, but right now the entire market is basically holding its breath for tonight.
Ah, the binary event. Micron releases its Q3 earnings tonight, right?
Yeah. That report is the ultimate read-through for global data center demand. It will either validate the AI demand thesis and trigger a massive bounce, or, well, it will extend the steep derating of Samsung and SK Hynix shares.
Okay, so if you want to avoid the specific semiconductor concentration risk, where else is the smart money rotating?
Well, traders are rotating into non-semiconductor candidates that are disconnected from this tech volatility. LG Chem is a prime example. They're pivoting hard, committing 15 trillion won, which is about 9.8 billion USD to R&D through 2035.
Oh, wow. And what about the biotech space?
Yeah, Alteogen is another major candidate. Their CEO is forecasting a record-breaking licensing year in 2026. Capital is just looking for growth stories that don't completely rely on tonight's Micron earnings.
The National Pension Service is the marginal seller at today's open, completely overpowering that 8.54 trillion won in retail dip buying. Meanwhile, Micron's earnings tonight will absolutely define the bounce or extend decision for Samsung and SK Hynix after that historic 910-point drop. And if you were looking to escape this trap, where a circuit breaker fired just because of tech concentration, non-semiconductor names like LG Chem and Alteogen offer immediate rotation value.
Precisely. Understanding these hidden market mechanics like pension rebalancing limits really helps you read between the lines instead of panicking. Knowing the why behind a market move is, your absolute best tool against information overload.
Which leaves you with the critical question to chew on. In today's market, is having an index completely dominated by a few tech giants a superpower, or the ultimate Achilles heel? That's today's AI PRISM Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.